Are you interested in investing in real estate, but unsure how to start? Watch this video for 3 strategies that can offer huge success. Hello and welcome back to another video with Mind Money Masters. I'm Cameron, and today we're going to talk about 3 strategies for success in real estate investing. Before we get started, please make sure to like this video, subscribe to my channel, turn on notifications, that little bell, comment in the feed below as to what you liked or what you'd like me to talk more about. And also as a disclaimer, I am not a licensed advisor. Please, before you take any of my advice, work with your licensed advisor, tax advisor, financial advisor before making any investment decisions. You know, I love this quote from Franklin Roosevelt, and I think it's very appropriate for what we're going to talk about today. Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. What do you think about that? Is it? Have you tried it? Well, that being said, the 3 strategies we're going to discuss today are wholesaling, flipping, and long-term investing. All we're doing today is residential properties. I will go into multi-unit properties on the next video, but let's get started. So the first strategy I want to take a look at here is wholesaling. This is a short-term real estate investing strategy that can be used to earn substantial profit, like huge profits. But do not confuse the real estate wholesaling with retail wholesaling. The 2 concepts are completely different. Real estate wholesaling does not involve more than one property. It's just one property at a time. The wholesaler contracts to buy a home and then markets the house to potential buyers and hopefully sells it at a higher price. This technique is commonly used with flippers. So wholesalers will flip it or send the contract to a flipper to do all of the actual heavy lifting. The aim of this strategy is to sell the house onwards before the contract with the original seller closes. So in this way, the wholesaler does not pass any money to the original seller until he or she has a buyer who will pay a higher price. The wholesaler's profit is the difference between the original price that you put it under contract for and the new price offered by that wholesaler's buyer. Like I said, potentially a flipper. Wholesaling is a method that allows people who want to become involved in property investing to make money from a property without needing finance. So really the big thing here is contracts. Contracts are super key in this. So make sure that whenever you purchase a contract, you're going to have or assigns next to your name. So it can be your XYZ LLC real estate firm, or assigns will be the purchaser. So ultimately you can assign it before you have to go to the closing date. So the purpose is definitely not to take ownership of the property. You kind of come in there as getting it under contract. Maybe you have a financial backer, maybe you don't, and you want to just turn a quick profit. You don't actually want to rehab it or get into the flipping side. You just want to, in essence, flip the contract to someone else. Now, definitely look into your states as far as any potential legality issues, but most of the time that I've seen, this is not an issue and it's not going to be outlawed within most states. But let's go to the next one. So the next one here is flipping. We kind of talked a little bit about this very briefly in the last slide. So flipping is frequently featured, as you've seen probably on many reality TV shows. So in this real estate strategy, someone will search around for a property that needs work, consequently sells it for a lower price, typically at an auction. If you're successful in buying the house for a low enough price, you can renovate the house and resell it for a substantial profit. Typically, it can be hard work, but a series of successful flips can generate a lot of profit that may later be used to buy property as an investment and rent it out. The key to being successful in flipping real estate, though, is to buy at the right price. If you get carried away at an auction, or if you get carried away for sale by owner, or really any type of, if the price goes too high and there's little margin for profit, a disciplined approach to buying is essential. But, put simply, house flippers aim to buy low, sell high as quickly as possible. Now, in the second quarter, this is an Adam Research document of 2019, the average profit from flipping a house was around $63,000. Many people begin house flipping as a side income and realizing that they can potentially switch once they make it full time. Others are content to keep it, as a spare time activity. I mean, if you're making $63,000 and you flip 2 or 3 houses, a year, you just basically made an extra $180,000. So not too bad from that perspective. Now, something to consider, though, that I really want you to write down and make note of is the 70% rule. Quickly, the 70% rule helps you decide on the purchase price. The max purchase price in the 70% rule is 70% of the after repair value. That's ARV, less the cost of repairs. For example, if the market for a similar home is $300,000 and a value in good condition, but the home requires $50,000 in repairs, then the max purchase price that you should pay for that particular home is $160,000. Think about it. $300,000 is the max value times 70% minus what the $50,000 would be for repairs, $160,000. It's not an exact science, so if you can get the property for less than 70%, then by all means go ahead and do that, and the rule potentially would allow for better profit. If it's a little bit higher than 70%, keep in mind that you may end up stuck with something that you may have to pay for longer. If the market kind of slides a little bit, you may not have as much wiggle room with that. Now, to get started on this strategy, sometimes just driving around areas that you're interested, and you can show basically property options that are in the area that you're looking for if you drive around and find it. Also, you can look at bank-owned properties. For sale by owners, FSBO properties are a good way for this strategy. Also, connecting with a good real estate agent who may have pocket listings. I don't know if you know many real estate agents, but they don't always put every single home out there on the MyBore report. They may have a couple that one agent says, hey, we got a listing that might be coming up, or they know somebody that, hey, I might be selling, might not be selling, but we're looking at that kind of like pocket listings. If something comes up that's kind of internal, that's not out there on the normal market, that's a great way to develop relationships with real estate agents and find these type of hidden properties. Also, real estate clubs around your city. You may be able to connect with other people that are flippers, that are wholesalers, that are ultimately any type of connections that you might have, because again, the wholesaler could have a good relationship with the flipper, and a wholesaler might be finding specific properties that could fit your 70% ARV concept, and you might be able to get that on contract from the wholesaler and be able to rehab it and flip it from that perspective. Next one I want to talk about is long-term ownership. Now, the reason why I bring up personal landlords and property management is, you got to find out if you're going to be in this property long-term and you're going to have a long-term value associated with this property. Then ultimately you got to decide, are you going to be a landlord, or are you going to manage the property by yourself? Are you going to hire a property manager? Are you going to collect the rent? So there is a huge difference between real estate investor and a landlord. A landlord has many tasks to take care of. Everything comes down to them in the end. How competent you are at carrying out these tasks will reflect on the levels of your success. So an investor typically employs contractors, realtors, property management companies to do much of the time-consuming tasks, obviously in exchange for money. Now, this kind of comes to where you got to build a team if you're going to be an investor. A landlord instead chooses to do all this work themselves and keep the money, and it's all a perception of what your time is worth compared to the value you have to pay to get this done. So when investing in properties, to rent is, important to take the time to sit down, imagine what your business model is going to look like. Make clear policies on how everything will be achieved. Stick to them. If you take on too much, you can become, the weak spot in your business. You don't want to be the highest paid employee in your business. Ultimately, if you're going for time freedom, which is kind of what we're all planning on, you want to create these processes and have a team that can help you so that you're not doing 80 hours a week. There's nothing wrong with choosing to be a landlord rather than an investor, as long as you are sure you have the capability and the time to carry out all the required tasks. Becoming a landlord does not mean that you will be unable to scale your business beyond the point that you can manage to handle yourself. You have to just take a lot of things into account. But as an investor, it is simply the finance that controls the growth of your business. So if you're kind of overseeing and you're kind of the wallet, then, from a finance perspective, you can scale much faster. Now, if you're handling all the work, an investor would typically delegate to a realtor or a property manager, then there's a finite limit to the amount of way that you can grow, but you can scale still with a little bit. But ultimately, if you're an investor, there's a big difference between investor and landlord. Now, why would you get a property manager? So a property manager will typically take care of most of the aspects of managing your property's day-to-day basis. Property manager will meet potential tenants, show them the property, explain the lease terms, get it signed, collect the rent, inspect the property, arrange for repairs, handle any maintenance or contract issues, trash, settle complaints. You don't want to be the person that they call at midnight because they have a plumbing leak. So that's kind of one of the things you got to really think about between being a landlord and being an investor. Also, property manager will prepare property budgets. So there's a lot of work, and employing a property manager will take these tasks from you and allow you to handle the investment and grow your business. Yes, obviously, it will cost you to employ a property manager, but your time has value. What's that value? You may find that you generate more income with your free time than what the manager is actually costing you. It may be you'll be able to enjoy these day-to-day tasks, but ultimately, are you an investor or are you a landlord? That's one of the things that you really have to consider. Now, obviously, my final take, I love to share this always, my final take at the end of every of a call. So, real estate investing strategy is a great way to build passive income and a massive net worth. That's pretty much kind of goes without saying, but it does take time to learn. And there are a lot of programs out there that really don't help you learn. Do your due diligence, research on any educational program. I would 100% absolutely strongly encourage finding a mentor and an actual program. Do not go out there and take it on your own. Do not try to just do this. There's a lot of nuances that you can learn through a real estate investing strategy, through a real estate investing program to create your strategy. And trying to do this out on your own can cause large amounts of personal debt or business debt, if it's not used effectively. So, in my personal opinion, to be truly successful in real estate investing, you may at one time use all three of these strategies. You maybe can start with wholesaling, a strategy that could give you some quick profits in the short term, and then flipping usually can offer more profit, but it takes more time. So maybe you jump from wholesaling when you create a little bit more cash flow and you can generate a good amount of initial investment to go into the wholesaling side, and you can show the banks also or the investors that you're working with that you've done this before, you at least have some experience in wholesaling. Maybe that might be an opportunity for you to go into flipping. Now, the long-term strategy that my personal favorite is the investing for cash flow. You get renters in there, you hire property managers, and ultimately, if the numbers are right, you can make a significant amount of profit, and it can be very, very passive. You keep the rental income, it's generated every month. You can get tax advantages in appreciation and depreciation. There's a lot of strategies out there. Like I said, next video that I'm going to go through is going to be multifamily investing, but you can get cash flow from multiple units at the same time. So yeah, that's one of the things that I want to definitely talk about here in the future. But once again, real estate, as you know I've talked about, is only one category of the asset quadrant. The wealthy have 7 streams of income from all 4 asset classes. Now, more on asset classes, I have a blog post called Stock Market Investing. I can put that in the description, but that'll talk a little bit more about the asset classes. Specifically, we have paper assets, which is basically the stock market. The other category is real estate investing. Another category is commodities, tangible goods. And then the last category is real estate investing. Is business, actually creating your own business. Now, that's something that I would say is probably the best thing to have. Now, you can start your own business in real estate, of course, but you can start your business small as well online. That's how I started. So my personal take is to kind of start your business kind of online and build and create that value and that wealth and that consistent cash flow, and then move into more tangible assets. Now, the program below offers you a coach mentor on day 1. It's going to be in the description. This is something that will teach you how to start a digital business from the ground up. There is no inventory. There is no e-commerce. It's not drop shipping. It is digital marketing. It will teach you how to build it and create your digital real estate portfolio. And ultimately, you can have a digital real estate portfolio, you can have a physical real estate portfolio, you can have a stock portfolio, you can have a commodities portfolio. You can create all four of these asset classes, which ultimately leads to true financial wealth. Thank you so much for watching. Please, 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 again, subscribe to my channel, turn on notifications so you can see anything else that I create, and comment. Let me know what you like. Let me know what else I can talk about. Really appreciate you for listening. Thanks so much. Happy investing. Have a wonderful day.